Good afternoon, good morning, добрый день. Let us start. We have been witness to a very rapid evolution of technologies in finance for many years. Now this tide of change approaches the core of the financial system, the notion of money, medium of payment. The faster economy is striving to operate without regard for physical distances and around the clock, the more it demands payment solutions. The ones that are equally fast, secure, available at any place, any time. This demand accelerated innovations both by the private sector and the central bank in this field. The innovations which move us forward but also creates risks. In this session, we will discuss possible scenarios of the digital money, further evolution and what regulators should do to steer this evolution for the benefit of the society. In particular, we'll be covering the role and functions of central bank digital currencies, also known as CBDCs, the merits of allowing stablecoins into official monetary systems, and what regulation shall accompany this. We'll also discuss how related risks can affect the banking system and how they should be addressed. And last but not the least, we'll review the options for international cooperation in this regard. Here today we have a lineup of esteemed speakers perfectly suited for this occasion. Mr. Zhou Xiaochuan was the governor of the People's Bank of China from 2002 to 2018 and is now the vice chairman of the BAO Forum for Asia. During his tenure as the governor, Mr. Zhou established the People's Bank of China's Digital Currency Research Institute. And I remember a speech by Mr. Zhou made as early as in mid-2010s in which he shared his opinion on digital currencies. China is among the pioneers in this area and has made a significant progress. Mr. Zhou mentioned that a distinction should be made between digital currencies and digital assets. Buying crypto assets such as Bitcoin and stablecoins is becoming a form of alternative investment, but this does not make them currencies. Mr. Tobias Adrian is the financial counselor and director of the Monetary and Capital Markets Department at the International Monetary Fund. The IMF is now also looking into how new technologies are transforming the international monetary system. In his earlier speech on the matter, Mr. Adrian has argued that the development of digital currencies certainly presents an opportunity for the public and private sectors to get to know each other better and to explore more efficient and effective ways to collaborate, not just domestically, but also across borders. Mr. Hyun-Sun Shin is the economic advisor and head of research at the Monetary and Economic Department of the Bank for International Settlements. The BIS has launched an innovation hub that focuses on CBDCs and cross-border payments in CBDCs, among other projects. The latest BIS annual report has a chapter dedicated to CBDCs in which Mr. Hyun and his colleagues emphasize the design of digital money should account for public interests, adding that combined with the new generation of retail payment system, CBDC would greatly contribute to competition and innovations. And Mr. Alexei Zabotkin is the deputy governor of the Bank of Russia and a member of our team in charge of designing the digital ruble. My first question will be to Governor Zhou. China was the first country to active testing of a central bank digital currency platform already in 2020. This process by now is very advanced. Please tell us about your experience in this area, the efforts that the People's Bank of China had to make to launch the digital renminbi and the expected results from introduction of this new form of money.
Okay, thank you very much. Rila, very nice to see you across the internet. It's my great pleasure to join you to discuss this very interesting topic. First, as you asked, I may have a few words on the DCEP development and the forthcoming electronic CNY is as an outcome of the research program and the pilot. I believe PBOC is going to have a detailed explanation about the system and its function and its characteristic. So I would like to use a very short briefing to summarize a few features. First, this is an evolution of an existing system. Rather than many people may expect to have a revolutionary new system. This is a two-tier system, and it may contain several payment schemes. Meanwhile, also allow them to have a dynamic upgrade and development. The system mainly considered to fit the internet and the mobile internet trend because the consumer would like to use the mobile phones to do many banking and payment. This is a new generation of payment system based on the existing development, which focus very much on the retail payment rather than that's cross-border payment. So the new system is a kind of upgrade with a higher efficiency, wider coverage of the usage, more reliability, and to provide more confidence to the user. One of the important features is provide much better interoperability, which is also allow the new innovation, new pilot to fit for the further development. Also, it's mainly focused on the domestic retail payment, but I think it's also bring the convenience for the foreign visitor into China. So their payment in current account. China also have a lot of going in out visitor to the other country. But whether the eCNY could be used for the cross-border usage, it's very much depend on the bilateral negotiation between China and the destination country. If both sides reach agreement, then there are several possibilities to provide the convenience and the facility for the payment. Currently, we do not focus very much on the other kind of cross-border payment, like investment, trade settlement, remittance, and financial market transaction, because it's may has a lot of policy discussion, policy coordination. So we are relatively prudent in this regard. I think this topic is very important to talk from Bitcoins to the stablecoins to the CBDC. This trend is, I think, is very interesting. The Bitcoins, there are already a lot of discussion. Now, very few people still have enthusiasm to consider it as a payment tool. A stable coin learn the lesson, make an improvement, and focus more on the payment. And based on those concepts, I think the relationship between stablecoins and CBDC is a very interesting and important issue, as Avrila already mentioned. In my opinion, stablecoin cannot be self-claimed as a stable. Also, it has a desire to be stable, but in the different situation, especially in the distress scenario, whether they can keep it to be stable or not, it's dependent on their capability, the confidence the public may have or have not. So it's very much rely on the central bank and the supervision. Only if they got the support from central bank and the supervisors, then it can be more stable or really stable coins. So there are a few measures which I think is important. Number one is the stablecoin issuers must have a reserve. Many people would like to see 100% reserve for the currency issued. However, the central bank needs to check what is the total circulation of stable coins. And based on this data, they ask how to calculate 100% reserve. Number two is capital adequacy ratios. As a currency issuer, they must have quite high capital requirements to deal with the liquidity problem and the distress problem. Number three, it is the issuing institution must be financially healthy and also healthy in the other regard. In terms that they must obey to the existing rules of regulation and under a close supervision of the supervisor. Number four, there should be a principle of separatability. The coin issuer should not combine their payment business with the other commercial business, because otherwise the risk happened in the other business may jeopardize the stability and the confidence of stablecoin. Number five, they must obey to the existing regulation, such as they must have a license. They must provide the transparency, and they should not use the venture capital money or the IPO money to subsidize the payment business. So they must deal themselves as a public service provider rather than the private business. In this situation, we would like we may see that the difference between the stablecoin and the CBDC is not that large. CBDC is a direct liability in terms of balance sheet. Stablecoin is the liability in the balance sheet of the issuer institution. But however, if they under the central bank support and supervision, and that means the central bank under the supervisor may have a very large percentage of off-balance sheet liability to support that's the value to be stable. There may be still a kind of difference, but not that big difference. I think concerning the central bank money and the commercial bank money in the deposit account or the other kind of banking account, somebody says that central bank money is fiat money, but commercial bank money is private money. I think it's not correct. As just now mentioned, since the commercial bank is under the support of central bank with a very high reserve, very high capital adequacy requirement, and under the supervision. So actually, that's the commercial bank's money in the accounting system actually is also very close to the central bank money. But of course, they may have a small probability to go bankruptcy. So it can be less stable. But however, we should say the central bank money is also not 100% stable. Central bank sometimes may make a mistake or errors, and then they may cause a high inflation. And that means in terms of purchasing power, central bank money is not 100% stable. So anyway, it's to provide a stable currency value, to provide an efficient payment system. Central bank can do many things in terms of efficiency, in terms of security, and also in terms of macroprudential capability. Thank you. Let me stop here.
Thank you very much, Mr. Zhou. You touched very important issues, including how stable can be a stable coin. And we have also the questions from our participants. And one of the questions I can ask our speakers maybe to touch them. Mr. Zhou has already expressed his view. What is the principal difference between stable coins and digital currencies? Do countries really need to have their national digital currencies instead of proper regulation of stable coins? It seems that stable coins can provide all the same features for the economy as ones of CBDC. And my question to Mr. Hearn, my next question will be for you. Dozens of regulators are now evaluating pros and cons of the possible launch of national digital currencies. And as I already mentioned, the third chapter of this year's annual BIS report discusses digital currencies, various architectures to be used, and the methods of identifying the clients. Which CBDC design do you consider the most promising, and why? It has a practical importance for Russia because we are working on our digital ruble and we discuss our prototype, and this question is very important for us.
Thank you, Governor. Thank you for the invitation, and it's great to join you on this panel. And thank you for publicizing the BIS annual economic report, which we published last week. And as you say, we have a chapter on central bank digital currencies, and we lay out some of the design choices in that chapter. I think one very important point we make is that CBDCs should be part of a two-tier system, where there is a division of labor between the central bank, which provides the core of the system, provide sound money and overall security, and it should have a relatively small footprint. The private sector then does most of the customer-facing activities, so onboarding, the day-to-day account management, and all the due diligence having to do with the AML. The reason for that is that the role of the central bank is there to provide the ultimate unit of account and the ultimate platform for sound money. And it should also provide neutrality in the sense of being commercially neutral, being there as a neutral party vis-a-vis the other private sector parties. Now, on top of that basic principle, we can have a number of different designs. But I think one design that would not be very consistent with having a small footprint is the so-called direct CBDC, where the central bank has most of the customer-facing activities directly. We think that is not consistent with the role of the central bank as being fundamentally there to provide the platform, the underlying base layer. There are now then a number of different choices which have to do with how the transactions are logged, how the ledger is maintained, and how the authentication actually happens. We argue for two different range of possibilities in that respect. There is something called an intermediated model, where the central bank only keeps a wholesale ledger and the detailed transactions are maintained by the private sector payment service providers. Or there could be a hybrid model where, again, most of the customer-facing activities are done by the commercial banks and other private PSPs, but the central bank maintains a copy of the whole ledger. And there are some trade-offs there having to do with the redundancy and the additional security that comes from it. But there is also a trade-off in terms of the concentration of data if the data is kept at the central bank. But we spend a lot of time in the chapter in discussing how CBDCs is also consistent with maintaining the data privacy of the users. And the one key principle is that the data can be arranged in such a way that the key pieces of the data are accessed only as they are needed for executing particular transactions. And so the user will maintain control of the data, but then grants access on a case-by-case basis. So I think that's roughly the highlights of the design choices. But I would certainly urge the listeners to take a look at the chapter. Thank you very much.
Thank you. Ken, I have a question. You compare, for example, account-based system and token-based system. We understand that the identification is very important. But in our case, we developed the system, token-based system, but with identification made by banks, KYC procedures, and so on. Do you think it's possible to have token-based CBDC, but identifiable?
Yes, I think that's also a possibility. So you can have a token-based system which runs on a private key, but then the identification would attach to the wallet rather than to the underlying transactions itself. So I think as long as some identification is built into the system to ensure the integrity of the payment system against money laundering and other illicit activities, and there is a way for law enforcement authorities to take the appropriate measures, whenever it's necessary, then I think that's certainly possible. I think that the difference would be when we think about cross-border use. If we think about cross-border use, then an account-based system with a full copy of the ledger in the central bank would facilitate tracking even if it's used outside the country. But I think that's also something that one can overcome through international cooperation. So I think the short answer is yes, it's certainly consistent to have a token-based system, but the ID verification is attached to the wallet.
Mm-hmm. Thank you very much. Tobias, the IMF is also looking into this subject. So what is your opinion on the best way to organize a monetary system involving CBDCs?
Yeah, thank you so much for having me on this panel. And I'm sorry that we cannot be in Russia right now. So, you know, CBDCs are attracting a lot of attention across countries. And what I would like to underline is that the specific motivations for CBDCs are quite different across countries. So we are seeing already that the design in sandboxes or in live pilots, such as in China, are quite different. And of course, we have one country that has launched the CBDC, the Bahamas. So in particular, the benefits that the membership is looking for are somewhat different. So let me explain the top 3 benefits that countries are looking for. So first of all, CBDC has the potential to make payment systems more cost-effective, competitive, and resilient. Due to the digital nature, CBDC could reduce the cost of managing physical cash, which can be substantial in countries that are very large or that have a lot of islands. And so by offering low-cost alternatives, CBDC can help discipline payment markets that are often highly concentrated and where fees tend to be high in some segments. Second, countries with large unbanked populations could introduce CBDC in order to enhance financial inclusion, especially if paired with digital IDs. And Hyun-Shin just explained some of the technological features that allow digital IDs, even in the context of token-based systems. Third, CBDCs can be leveraged to improve cross-border payments, which are currently slow, costly, and not easily accessible for the vast majority of countries on this planet. Cross-border payments today are largely multi-layered in correspondent banking relationships, which creates a long payment chain and increases costs. CBDCs could be traded more directly by intermediaries or end users, depending on the specifics of the setup, as long as they share common technological standards. And of course, the IMF is collaborating with the BIS, the CPMI, and the FSB in order to establish the relevant guidelines for such cross-border usage of CBDCs. Now, those were the benefits, but let me also talk about the costs. And those are significant risks. First of all, there's the risk of banking sector disintermediation. Deposits could be withdrawn from commercial banks. Secondly, there's reputational risk for central banks. Offering CBDCs requires central banks to be active along several steps of the payment value chain. Failure to satisfy any of the functions, including interfacing different types of customers, those could be financial institutions, building front-end wallets, picking and maintaining technology, monitoring transactions, being responsible for anti-money laundering processes. All of these processes could be, so depending on the design, some of those could be in the central bank or they could be in the private sector. And so to the extent that it's the central bank that is doing all these things, there's of course a risk that the technology fails, even if they fail sometimes. And this could be due to technology glitches, cyber attacks, or human error. And so that could certainly undermine central banks' reputations. Third, cross-border usage of CBDC can bring macro-financial risks. CBDC of reserve currency issuers, such as the dollar or renminbi, could lead to currency substitution in countries with weak governance frameworks, that have high inflation or volatile exchange rates. In most cases, those risks, so the three risks that I talked about here, banking sector disintermediation, reputational risk, and the cross-border use of CBDC, those risks can be attenuated through design choices. So, for example, CBDC holdings could offer a lower interest rate than the policy rate. They could have zero interest rates or negative interest rates in some countries. Transaction limits could be imposed, and certainly some jurisdictions are thinking about that, and it is a design feature in the Bahamas. CBDC could also be distributed through existing financial institutions so that much of the CBDC interface is done by private sector institutions, and CBDCs could limit holdings by foreigners to curb currency substitution. You asked a related question, which is about cryptocurrencies and stablecoins. So that was a question from the audience. So cryptocurrencies and stablecoins are digital representations of value that are privately issued and secured by cryptography and leverage decentralized ledger DLT technology that enables peer-to-peer transactions. Crypto assets like Bitcoin are not backed by any asset and are typically very volatile and are expensive to transact in. Stablecoins, on the other hand, are issued by a legal entity that is attempting to offer price stability by linking their value to fixed assets such as fiat currency, like the US dollar or some other currency. So to come to the question, so the degree to which a stablecoin is safe really depends on the design of the stablecoin, the regulatory umbrella around the stablecoin, and the degree to which it has access to a backstop by a central bank. And we see at the moment already a wide variety of design choices. Some are very sound, but some are very fragile. And so it is really about the design of the stablecoin as to whether those are very safe or not. Let me stop.
Thank you very much, Tobias. I fully agree that these CBDCs, they have significant advantages, benefits for consumers, but also significant risks. And I see that our participants from the audience, they have the same questions about these pros and cons. What are concrete advantages for people and for business, and how this this CBDC can exist together with to be neighboring with private initiatives. And for example, there is a question: can the digital ruble or digital currency improve the competition in the financial market? Or in the case of launching the issuance process of stable coins in Russia, who could become a potential issuer? Will this not repeat the experience of the 19th in terms of surrogate money? People can think that stable coins, if they are not regulated properly, they can become this type of surrogate. And Alexei, so how do the international institutions' conclusions compare to the concept we use for designing the digital ruble prototype?
Yeah, thank you, Governor. The Of course, the Bank of Russia extensively studied the thinking of both our colleagues in other central banks and of the international organizations on this topic over the past 2-3 years, and I shall say that it had a very significant impact on our own thinking. Not to repeat the points already made by Governor Zhou, Hyun, and Tobias, I will zero in on 3 specific features of the digital ruble design concept, those which somewhat differentiate the way we approach the design compared to what I personally judge at the moment is the CBDC mainstream. First, the matter of the CBDC architecture. In our design, the digital ruble is, of course, the direct claim of the holder on the central bank, but all individual electronic wallets for the digital ruble are opened on the Bank of Russia balance sheet and in the centralized ledger maintained by the Bank of Russia. That said, and alluding to what Hyun was explaining about the differentiation between different approaches, the banks and other financial intermediaries carry out all direct client interactions, including KYC procedures, and they also provide access to customer digital wallets through their applications. So intrinsically, this is a 2-tier structure for the CBDC architecture. But we think that this approach will carry the best promise to negotiate a very important trade-off. A recent BIS paper by Auer and Bohm, CBDC, the quest for minimally invasive technology, describes this trade-off as being between a complex technical infrastructure and a complex supervisory regime. In our humble opinion, the complexity of the technical infrastructure will be easier to tame than to impose a complex granular supervision on strictly intermediating architectures. Therefore, this choice. Number 2 has to do with the dichotomy between account-based and token-based systems, something which Governor already asked Hyun about. The digital ruble wallets will be definitely linked to identities of their owners. Already was mentioned many times, even today, that AML requirements leave us pretty much no other choice, right? And from this standpoint, the access regime shall be classified as an accounts-based system. I am, therefore I own. But the currency in these wallets, we think, it should be tokenized. That is, it will consist of individually distinguishable items. One can think of this approach by analogy to the real-life usual wallet holding individual banknotes, but that wallet is monogrammed by the name of its owner. Moreover, and that will be the difference with the physical banknotes, the tokens will be inscribed with the list of all their prior owners and possibly marked with some other properties. And these 2 additional features will facilitate the novel functionality related to traceability of money flow and conditioning of the use of individual pieces of money. And number 3, and that's a very important topic which Tobias already touched upon, is the matter of remuneration of the CBDC balances. And in most white papers, this still stands as an open question to be decided further down the line, but the leaning seems to be towards the designs which favor allowing the accrual of interest in some form, right? Yet, at the same time, on our part, we very strongly agree with the thesis advanced in the same already cited paper by Auer and Bohm. And here I will permit myself to quote, "The economic design should emphasize the use of the CBDC as medium of exchange and needs to limit its appeal as the savings vehicle." In light of this, the Bank of Russia already made a definitive decision that the digital ruble will not be interest-bearing instrument. This is the ultimate way, in our view, to draw a very clear line between the medium of exchange and the means of savings functions, and this shall facilitate the unbundling of these functions within the realm of the digital money. I will stop here.
Thank you. And now I would like to propose to our audience to vote about some issues and to share your opinions with us on which kind of new money will survive and which will be erased by regulators' policies or maybe the natural flow of life. So what should be considered an evolutionary dead end for the monetary systems? Cryptocurrencies, stablecoins, CBDCs, or traditional fiat currencies? Please vote on these questions. But we will continue our discussion, and I would like to ask Mr. Zhou, Governor Zhou. China has experienced a situation when major big techs have established an almost total control over retail payment operations. What risks does this create? Could CBDC reduce these risks? And what should the accompanying regulation look like?
Okay, thank you for the question. I think you are right that in the past decade, we see the big tech contribute a lot for pushing the development of digital currency in terms of research and innovation in search of pushing the usage of the new payment system. But in the past decade, it's mainly to develop the mobile phone internet payment system, which bring the convenience and the efficiency for the consumer and for the merchant. It's not create a new type of currency. So based on that, we can still have a further development and upgrade. Now it's gradually reach a consensus that's a different kind of electronic and digital payment system could work together to have a better system with interoperability. During this decade, we also see a lot of, it's the mistake or some of failures. Some of them in a period may ignore the risk. Some of them may abuse the power of payment and the subsidies. Some of them may use their position to gain the other commercial profit, or may have some of a contradiction with supervisors. So all these kind of things, based on all these kind of things, that's gradually that's central bank and the private sector and commercial bank and telecommunication operators, they gradually reach a consensus that we need to develop a new generation systems. So it's a kind of upgrade, and this is a two-tier system. So we include those of big tech and commercial bank. But China is a very large country. So when you identify which big tech included, there is also a kind of competition among each other.
I think we have some technical problems.
Sorry, that's
Yeah.
I didn't know when it stopped the voice. But anyway, I would like to say that in the beginning of the digital currency development, we have a lot of challenge. The big tech, the private sector may raise some kind of question to say, oh, we see that the central bank can print money and issue money. Why I cannot do that? Yeah, they want to do that directly. It's printing money is easier than making money. So now it's become a joke. And some other big tech people also ask questions that why central bank run the infrastructure, financial infrastructure, like cross-bank clearing system or the others. Why I, as a big tech, cannot run and set up infrastructure? So we need to have a better communication to discuss among each other, and finally, people are ready to reach a consensus to see that the printing money is a big matter. It should be the function of central bank. Infrastructure should be led by the central bank and the government. Also, there is a possibility to have a private-public partnership, so-called PPP. But running the PPP is also needed. It's the participants, the partners should pay more attention to the public interest rather than the private interest, the commercial interest. So I think this is it's an evolutionary process. It's gradually we see more and more common sense, more and more consensus, and to formulate the R&D teams together for China to move into the recent upgrade of digital currency and the electronic payment system. Thank you. I stop here.
Thank you very much. And I would like to ask Hyun about your opinion, continuing this subject that Governor Zhou just touched. In the opinion of the BIS, should private stablecoins and cryptocurrencies be a part of the global monetary system? If so, how should they be regulated? And how can CBDCs effectively compete in the area of global payments with global stablecoins, which can be used for these purposes within global big techs?
So that's a very good question. I think at the outset, I think it's important to point out that once CBDCs are rolled out and we manage to interlink CBDCs across borders, then they could really present a very much more parsimonious monetary architecture that reduces costs, that Tobias also mentioned, to do with the long chain of correspondent banks. So it reduces costs, it reduces delays. And in that respect, it would be very much consistent with the broad thrust of the public interest case for CBDCs in providing a much more competitive and much more inclusive financial system. So it will be translating those kinds of public policy goals in the global context as well. So I think that would be a base on which other initiatives could also interact. In our view, cryptocurrencies like Bitcoin are not really suitable as a means of payment. We devoted a lot of time to that question in a previous report that we wrote 2 or 3 years ago due to the lack of scalability and the problems to do with finality. Instead, they have become much more as crypto assets. They're much more speculative vehicles, and the issues there are much more to do with consumer protection and all the attendant safeguards that have to do with conduct rather than with a payment system itself. Global stable coins could also be part of that ecosystem. But of course, the global stable coins themselves will need to be a part of that ecosystem whereby the soundness of money is actually guaranteed. And as we say in this year's report, the fact that you're using conventional money, so fiat currencies, as the backing for the stablecoin is very much based on the idea that the underlying stability comes from conventional money itself. And so in that sense, it's, as we say, it's more of an appendage to the current monetary system rather than a game changer. But above all, we would need to make sure that these initiatives also accord with the best practice in know your customer and anti-money laundering regulations.
Thank you. Tobias, a question to you. What are the scenarios of the global monetary system's evolution considered by the IMF? What can and should be done by central banks in order to implement scenario that would be the least risky for the public interest and the most productive, more beneficial for the global economic development?
Yeah, thank you so much. So it is very clear that this evolution of monetary systems through the development of CBDCs, but also through the adoption of stablecoins and crypto assets, all of that is going to change the global monetary system. So in terms of central banks thinking about the design of CBDCs, I don't think that central banks should aim to develop an international monetary system per se based on CBDCs. Rather, central banks should design CBDCs so as to support a stable and efficient IMS. So, the design of the CBDC should be done in the context of the global monetary system. So central banks should leverage CBDCs to improve connections between countries, payment systems, while avoiding fragmentation in cross-border payments. Cross-border usage of CBDC can potentially solve many of the current pain points that we already discussed. Both Hyun and I mentioned some of those. Under some conditions, CBDC can also foster financial inclusion, including through cross-border payments. Of course, many remittance workers are relying, of course, on cross-border payments, and for many countries, that is a very large fraction of income. The impact could be direct or indirect. The presence of cross-border CBDC will induce other payment providers to also improve services and potentially lower costs. Cooperation among central banks will be key to build CBDCs with features that contain spillovers and facilitate backstops. For example, the design of CBDC should be done so as to curb currency substitution so that issuing countries could explore the option of limiting CBDC transactions for foreigners and allow foreign countries to introduce these limits on their territory. Capital flow management measures, which might involve restrictions on certain cross-border transactions, could be built directly into the CBDC. As you know, the vast majority of countries have capital flow measures that limit the degree to which currency can be transacted and capital can be crossing borders, and that is a very important element in the monetary framework for the vast majority of countries today. And so CBDCs, due to the programmable nature of tokens, can actually be helpful in this respect. Programmability could also be exploited to facilitate regional pooling and the sharing of reserve assets as well as their disbursement. So as for private digital cash substitutes, such as stablecoins, I also do not think that developing CBDC to crowd out these is the answer necessarily. Instead, privately issued money will need to be regulated appropriately. So CBDC and private stablecoins will certainly coexist to some degree. When you think about money today, M0 is very small relative to M1 and M2 in the vast majority of countries. And that could very well be the case for digital currencies going forward as well. But it is very important that the regulatory setup of stablecoins is appropriate. And in many countries, that is not the case today. So having a comprehensive regulatory and backstopping approach that defines how central bank backstops and deposit insurance interact with stablecoins is very first order to get to a stable system. Let us remember that most of the money we use today is issued by the private sector, right? I mean, M1 is privately issued and in the form of commercial bank deposits. And that is transformable into cash at any time because of the backstops and because of the regulation that is put on the banks. This form of money has been innovative and serves users well because, of course, the commercial banks innovate in order to serve customers. And we want that kind of private sector innovation around digital currencies as well. It is safe, so private money is safe today. M1 is very safe because it is closely supervised, has backstops, and has very clear legal frameworks. So that's a point that hasn't been discussed yet, is that the legal and regulatory framework has to be very clear. The same must be true for private issuers of digital money. Clear legal frameworks must be developed, and clear regulation must be enacted to achieve financial stability, financial integrity, consumer protection, and market contestability. Once these rules are clearly written, some providers will drop out of the market while others will remain and new entrants will come in. So that will certainly be a shock to the financial system, but that is not a bad thing per se. This is what innovation is about. So we should not see the future as either or. There will certainly be CBDC, publicly issued digital money, as well as privately issued stable coins, but having the right regulation, legal framework, and backstops for that private digital money is extremely important. Let me stop here.
Thank you very much. Now I think we can see the results of the poll. Show us, please. Oh, it's interesting. I think it's a very interesting results. I personally would vote for cyber currencies because they are too volatile and do not account for real consumers' interests. As for stablecoins, I agree they could become a part of the system, and that's why we need to learn how to regulate them properly. And in conclusion, I would stress on that we are facing a quite transformative changes. Yes, they are maybe evolutionary, but very significant changes in the monetary system. And our task is to design them and to adapt our regulation in the interests of the society and people. And I would like to thank you all, to thank all the speakers for your excellent, very, very rich interventions. That was great, and I wish you all the best to our audience.